Hi, guys. Welcome to the How I Raise It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Brian Gannon of Loop. Loop makes a digital picture frame and private social network for sharing photos with your family. It's pretty cool technology. Brian is a master networker, so he shares his tips for building and activating your network, using social proof to cut through the noise when reaching out to investors, creating FOMO, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So this is really going to help you get ready to raise capital. To get instant access, please click the link in the first comment. While you're there, please leave us a nice comment, what you like about this episode or this series in general. We really appreciate that. Last but not least, if you enjoyed this conversation and think someone else would too, please share it with them and smash that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Brian.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Brian Gannon of Loop joining us from San Francisco. How's your day going?
Doing great so far, Nathan. Nice to see you again.
Awesome. Brian is a cool guy, a customer, and just an all-around fun dude.
Paying customer.
Paying customer, I love it. Those are my favorite types on this show. And you have been for quite a while, so thank you for that. What is Loop? Tell us about what you do.
So Loop is a private social network that helps families stay connected. So it's a photo sharing app. But what's unique about what we do is we actually added in a piece of hardware, a digital picture frame that connects to the service. And what that did was it gave us a sort of leg up on any other app that you would use for photo sharing. And even to summarize, people say, who's your biggest competitor? I often say it's text messaging, and that most families have kind of drifted towards some 5 to 10 person group of text messaging to share photos. And we saw that as an interesting hack that we love. When we see hacks, it's like, okay, great. What could we do to build something purpose built? And it turns out that we thought, and we were kind of seeing the evidence right now that it's true. Having this full suite of both the hardware and the software gives us crazy good retention. And people love the product and a great business model.
And so, for folks listening, paint a picture. It's a picture frame that's sitting on my desk, and then my mom, my sisters can send photos to that frame, or what?
What an amateur I am, not having my product out here. It's like, I'm just laughing, but no, yes, exactly. So the idea would be like, let's say you started it really innocuously, where you're like, hey, it's mom's birthday. I've got little kids, we usually sell to new parents. Let's just get mom this thing. She's dying. She's always asking for more pictures. Okay, great. A lot of people can relate to that. You get it. You give her the frame. She probably has the app too, depending on how old. You and your wife or husband then start to push pictures using the app. And then the app kind of becomes, over time, your family feed, right? So everything's kind of like in an Instagram format of like time. And then we break it into albums as well. And then invariably someone says, hey, wait a minute, that works really good for your mom. Let's get one for my mom. Oh, okay, great. No, let's get one for ourselves because we get all these pictures on our phone. And then suddenly you've got a full network built out with maybe somewhere between 7 and 10 app users and like 3 or 4 Loop physical hardware users.
Cool. Yeah, that's interesting. And is it, am I able to push photos, or is it more passive?
Yeah, it's all based on, one of the things we want to make sure was we don't change users' behavior too much, like, anything you ask them to do differently. And if you watched how somebody observed how they share pictures, out of the billions of pictures they take, they grab a handful and they manually press a button into either Facebook, Instagram, or a text message chain, and then curate those things in little bites, right? And there's only a small segment of people that are so organized, they build fancy albums and have subjects. We just want to make this super easy. And in fact, we actually have a text message integration. So we'll give you a phone number. Even if you don't want to open up the app and you're just kind of busy, you can just zap one. And then it goes into the app where people can engage. They can like the photo. They can add comments. And so it's almost like in the app, a feed of photos done in linear fashion. And then beneath each photo, there's a set of comments that are all attached to the photo. So the photo is the hero, and then the comments below, so people can kind of engage in that. And that's actually what makes the whole, merry-go-round go round, is the full engagement where people are seeing the positive reinforcement of sharing a photo, getting a like. It's all fundamental stuff of social media, but I think doing it, saying it is one thing, right? It's like anything in a startup, and building it is actually one, completely different. So we finally got that thing to work really, really well. And now our families call us up sometimes, if there's like an issue, I don't know what happens, you end up in the conversations, you'll just hear these incredible stories of how, frankly, like change their lives. Like they can't imagine living without it. So.
Yeah, and it's a really good concept. I'll have to run it by my wife, who's the decision maker on all such things.
Oh, yeah, no,
a lot.
Oh, it's just fascinating. It is an interesting marketing angle though too, but we have way better success if we go through the wives rather than a husband taking it in. It's kind of like, what are you trying to push? What other kind of gadgets trying to push into the house, right?
Uh-huh.
So usually you can do that if you're buying it for a parent. Oh, hey, let's get one for your mom or something. But we've just found that there's, a lot of our content is going to be moms talking to other moms. It's just a little bit easier. But that being said, and we're surprised by this, we're probably 60-40 women to men. So we're still, we're pretty balanced, surprisingly. I always thought it would be like 70 or 80% women, but, it does seem to, for one reason or another, resonate with, both sides of the table.
Yeah, that's great. And last question, and then we'll get into the fundraising. What's the form factor? What size is this frame, and what's it cost? I'm assuming it's a monthly subscription.
Yeah, so it's just like Ring Doorbell in terms of like a business model and pricing. Even, our product costs about $160. If you're buying them in bulk, you get them discounted down like 150, 140. Buy a single, it's 169. But on average, that's what our price will be. We sell that direct to consumer, and you could use it perfectly fine and have a great time with no subscription service, similar to Ring Doorbell. And what you get with Loop with the subscription is you get a backup of all the photos in the cloud. So if anything goes wrong, you have it, and just kind of like Dropbox, where you'll hit a limit eventually if you really like the product, and eventually, it's 16 gig of free. To go to unlimited, then you need to go to the subscription. And then one of the cool features is video. And this is maybe a little personal thing for me, but it's almost like someone's being there if you can record real life as it's happening. Like, this is different. Live video is different, but recording a video of activities that a family's doing, kids are doing, sending that minutes long, we can do up to 5 minutes. It's really, really a special experience. So we also takes a ton of bandwidth and all that. That's also in the subscription as well. And then as part of the business, talking about this from a business model, we're just, every new feature that we're adding, usually we'll put that or some variation of it, like a limited, paywall version into the subscription. And so the idea is behind it is to become like Amazon Prime, where it's just a no-brainer to get into the subscription because you just get so much value.
Yeah, cool. Excellent. How much is that monthly subscription?
$3 a month today.
Oh, okay. Awesome. Cool. Let's talk about raising money for this. It's a fun idea. Yeah. How much have you guys raised, and over how many rounds?
Yeah, about $8 million over the course of 3 rounds, this being the third. And we started out with, by the way, the language has changed, right? Like between angels and pre-seeds and all that. And so we started out kind of friends and family would probably be the correct way to describe it. I was kind of telling you this earlier. I didn't feel comfortable raising until I had fully committed and quit my job, right? And it does, to be fair, it's kind of interesting. I always, when you commit to something, the world conspires to help you, right? So at first I was telling people about this interesting idea. I had a bunch of people working on the side. We all had jobs. And then eventually I just said, this is going way too slow. Let's go for this, right? And I emailed everyone who was working with me and said, hey, I quit my job, last day's 2 weeks. It's time to go. Who's with me? And nobody came. Nobody came. We just had a
part-time kind of.
What's that?
Everyone else was like part-time.
Yeah, everyone was we were just kind of building a prototype and experimenting and interviewing and kind of going for it. But I felt like we had, we'd gotten an insight and it really helped. And at that point, there just weren't the right people. And I'm kind of glad I did that, because it did, rather than extend that question mark of who's going to be the founding team, I just had to kind of go for it and then start to really recruit who's going to be with us going forward. So, and then once I did that, and actually this is important, and maybe this is a theme that, we talk about, is like this increasing levels of credibility, right? And so in some ways, as you're raising money, you're looking for proof points, right? Um, Another idea just came up and popped in my head that this is going to be important for, and remember we just had that conversation a couple of days ago. There's almost, people sometimes worry about being too early to raise, and they're like, hey, I got no revenue. Investors all want revenue, they want traction. Well, there's actually a good honeymoon period right at the beginning when the dream is there and you have no data to disprove the dream, right?
Yeah, yeah,
And
sure.
so I encourage people to say, lean into that. And there's actually a subset of investors that are actually looking to be early. I don't know if Sequoia actually does this, but like, I think they even say this, like, we want to be your first check. And a lot of people say that. And there's a little bit of truth to that. But, there is definitely people out there that just love the dream. And especially if you're giving an attractive price and you're not raising a ton of money, maybe you're trying to raise $250,000 or something. Obviously, if you're a seasoned entrepreneur with a massive network, these numbers can change. But if you're just new and you're trying to figure things out, you want to get $250,000 to build something, it's a really interesting time to talk about dreams. So I always encourage people to think about that. And that's where I was at that time. In fact, not only that, body language in fundraising is pretty important. Like, someone mentioned this other way. These investors is an asymmetric, they see thousands of entrepreneurs and they can see through your fears and all your baloney. But in the early days, you generally are so stoked about this and unreasonably exuberant and overconfident in what you're doing that's real, right? And I call it kind of the proverbial putting your foot up on the desk. And I think having that moxie is hugely powerful emotionally, for to kind of get through the difficult life of an investor who's meeting hundreds and thousands of people and busy trillions of emails. Like, who do I with very little data? That's not an easy job, and you make it a lot easier with the confidence.
Yeah. Yeah. I mean, in the early days when it's a dream, I like what you're saying. You have all the confidence, you're super fired up, you're energized, and it's all just pure upside potential at that point because there's no data, right? There's no data saying, oh, churn is really high or
Right.
everything costs much more. It's just pure open sea territory, blue ocean territory.
Blue ocean. Yeah.
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 Interesting. Good. So, okay. So you raised.
Yeah, and I'll give you a little insight into this too. And this almost never happens. So take what you will. There's a piece of this that is a common thread of me seeking out to find any proof point of credibility I can add into that. And usually that is in the form of this kind of famous person believes in me, right? And so our first proof point, like I pitched this to some of my buddies. I fortunately live in San Francisco. Fortunately, a lot of my buddies are in the startup ecosystem. I didn't even know this at the time, but when Uber was being founded, I was having a dinner with Travis and Garrett, like with 7 or 8 people, and I knew Garrett a bit. I didn't know Travis, but like, you just kind of into this stuff. And this is way before they were famous, but in any event, I was able to pitch some buddies and say, I'm thinking of doing this. And, they actually came back. One of these guys happened to be the first investor in Ring Doorbell. And he's like, I see a lot of similarities in what you're doing. And I love it. And he said, what's the first thing you want to do? And I was like, I need to get a lawyer and incorporate. He's like, no. You need to build a product and you need to but he's like, okay, but maybe it makes sense for you to get incorporated. I'm going to introduce you to this guy named Ted Wang, right? And I'm like, oh, who's Ted? Well, he just happens to be the guy that took Facebook public. He was, he fired Jack Dorsey on the board of Twitter. He wasn't on the board, but he was there. And this is all public information in the books that were out there. And he's like, why don't we, Fenwick and West, we'll bring you to him. And if he likes it, you never know. They might roll the bill. Sometimes they do this with startups. They say, I'll do this for free. I'll incorporate you and help you get going. And then when you get your seed round, then you pay me back, which would be whatever it's going to be, 25, 50 grand, real cash, right? So in the event, he said, I love it. This is great. I could totally use this in my family. Love it. And right around that same time, I had been applying for now I'm trying to remember which one was first, but I think it was right around the same time. There was an incubator, an accelerator called Highway 1
Oh yeah.
that that really focused on connected hardware. So okay, the software world meets the hardware world, and their thesis was, you're going to be challenged in figuring out this hardware stuff. We'll accelerate that piece of it. You better be worried about your software and your brand, but we're going to demystify this a bit. And they gave us 20 grand. Like his first capital in is 20 grand, right? And you're like, okay, like I can hire a designer to do a little bit of work here. I can start to get the app moving. If there's any generally speaking, you weren't paying out of pocket for a ton of hardware. You were kind of just getting things prepared. Now all of a sudden I got 2 proof points, right? There's Ted's involved. 2, I'm in Highway 1. And at the very end of Highway 1, I'm now this is all kind of coming back. There is a demo day, right? And at that demo day, you do in front of like 100 people, investors and other people. And what I was able to get was they filmed the demo, 5-minute demo, whatever it was, and pressing a button, picture shows up, and I'm in there, standing up in all the glory, right? But there's a lot of energy involved in it. And I basically leveraged that demo day, right, as a fundraising tool to say, here's me giving the pitch in the demo. And I emailed that to a few friends and said, hey, just checking out. And I'd been taking them along for the ride, but here's like this moment in time. Hey, we're raising a seed round now or an angel round. Are you interested in getting involved? And, someone said, what's your minimum ticket? And I'm like, okay, hold on, what's minimum ticket mean? Okay. Sure. I don't know, right? I kind of made up a number. And in fact, 2 people were coming in at the same time, and I kind of implied that the other person had invested because I was pretty confident. And so, oh, this other person's coming in for 50. This person's coming in for 50. And like, but that was the beginning, right? And then we kind of rolled that up, and then fast forward a bit. Really funny. This is yet again another. Is this okay to keep rolling with this?
Yeah, keep going.
Okay.
Keep going. I love it. And
it's all coming like real time. So then I go into right out of that. Actually, this is kind of a funny story. I don't know if you remember something called the Founders Den in San Francisco. And it was Jason Johnson, who was the founder of August Doorlock, along with Yves. Yves was just part of his company of August, but Jason and a handful of other guys were running Founders Den, a 6-month thing. You go up and you show in. And again, I was thinking, okay, well, we're going to be around people, right? And more collisions into these people could result in better things. And he was giving a talk at Highway 1, and right at the end of it, he had just launched his product, I think, or whatever. And he said, and I was like, you know what? I'd love to get into the Founders Den. I'm going to just go like, let's see what I can do here. I actually parked my car close, and he's going outside, and I knew it's a terrible place to get an Uber. Like they almost never come. They're canceling. And I'm like, hey, Jason, this is going. And he's like, yeah, my Uber's. I go, hey, look, if you're interested, I can I can drive you to your thing. And he was kind of like, who the frig is this crazy guy, right? Like, this is a little bit much. And I go, I'm just going to pitch you. Like, it's almost like, I just want to pitch you on the product company and then, talk. Oh, okay, that makes sense. So we drive to his spot. He's like, I love what you're doing. Sure, come on into Founders Den. And he eventually became an advisor as well, right? So a guy had so now a little brick by brick, right? We're kind of stacking on these things. And then I hit a little bit of a lull. And part of the lull was that I didn't know how to fundraise. Right. I had kind of gotten lucky on a couple little, checks here, people I knew who were very liquid at the time. But I didn't understand the process. And in fact, I thought, how did I put it? Like, I almost felt like one of those things too, is like, if you wrote an email to one investor once, like I had gotten this horrible advice that you should probably, be very careful with who you go out with this thing and only send a deck to like 6 people and tell them they're really early and all that. Mm-hmm. That's fine if you're going to expend 1 week on it, but definitely don't make that part of your strategy, because the odds of just one of these 6 jumping out and bursting into the scene is very unlikely. So we're kind of rolling for a while, and I'm not being successful. I don't have a process. I don't have a list of names. I'm trying to, but I'm just kind of going at it the wrong way, slow and not intense, halfway working on my product, halfway doing this. And I think I just started getting a bit more serious. And 2 things happened, which was fascinating. Number one, I had pitched an investor and never followed up with them, right? And I had pretty good calls with them. This is Resolute Ventures, Renaud Barcoin and Mike Hirschland. I'd first talked with Mike. He's in Boston. Then I met with with Renan, and after I gave the pitch, he's like, "It's interesting. So you're missing something though. What is the ask? What are you trying to do? Like, you're just telling me about your company. You need to, like, how much are you raising? Who else is in? Right? Like, he's like coaching me on this, and I'm like, okay, yeah, you're right. Sorry about that. Yeah." And it went dead again because I didn't follow up like I should have, right? And I didn't have any pathway to follow up, except I remembered that Mike Hirschland was meeting buddies at CES every year with like Dave Gold, a bunch of famous people that go there every year. And I don't really go to CES too, but I don't even know if I was going to go this year. I emailed and said, "Hey, I'm going to be there. You guys want to meet?" And I never met him face to face. Maybe we'll meet face to face. And he said, "Sure." So I go in there and I meet, and we hit it off. It was a great meeting right before I got on the flight, and so now I'm kind of waiting there. This was like on a Thursday or something like that. And some fascinating stuff happened in between. Now I still don't have an answer back, right? I'm still kind of floating here, but it's still a short window. And I kind of just got pissed and I go, you know what? I'm just going to throw my deck up on Angel List. Like, and by the way, I wasn't on Angel List because I had this foolish notion that I don't want to give everyone my secret sauce or whatever. It was so stupid, right? And within 24 hours of me putting it up on Angel List, I got an email from, and I think it was David Tisch. I don't know if it was him or I basically, had a phone call. I actually answered back. I go, this is like, I'm mixing up the times. So I'm getting it now. That Monday, I get an email back from Mike and said, "We'd love to invest. Can we put in $250,000?" Right. And I'm like, amazing. Right. This is great. But this next, David had a phone call and I said, "Dave, I'm really sorry, but we're kind of full. It was supposed to be a $250,000 round. I'm now at, I've already taken a couple more checks." And then the big one came in and he's like, just little word of advice, probably should just always take capital if somebody's offering you. And he goes, and to be fair, he really understood where we're going with it better than most people in terms of the roadmap and where it could be. And I said, "Yeah, you're right." And that was a 6-figure check. And I was like, "Oh my God, we're off." Right. And that was a transformational moment. We were able to start to build the product and actually more so do a pre-order, right? And so if you kind of think back about the way things would work, we were trying to simultaneously build and get momentum on the product development side. You wouldn't have enough money to build it all, but you want to get within striking distance. So if somebody says, "I give you this money and you're going to have a product in 6 months," right? That's what we're kind of the next milestone would have been. But in order to do that, and everyone was like, Kickstarter is all the rage. Yeah. We were like, okay, let's go out and do, a great Kickstarter. And so we invested that money, some of that money in doing like a video, right? For tens and tens of thousands of dollars, right? From a famous video guy called Sandwich Video, Adam Lizagore out of LA. He did actually Square for Jack Dorsey. He did, I don't know, a lot of like real home runs. And he loved what we were doing. And so, but I'll kind of pause there, but that was like this, how we got to phase 1, which would be that first, angel round, which was supposed to be a little bit less, but then turn a bit more. But yeah, maybe just give it a pause to breathe for a moment on that.
Sure.
Yeah.
Good. So, all right. So you hustled up the angel round, Resolute, David Tisch, and then Kickstarter. What did that generate?
Yeah. So this is where it got a little bit funny. I mean, you almost can't make this stuff up, but in the middle of building this product, so I had filmed the video with Adam, and it all was on a product that I eventually scrapped, meaning I went for something a little bit more bold. In fact, I just happen to have my old version here, right? This is one we actually shipped. Oh, but wow. Rather than looking like a frame, I just had this idea that I wanted it to be a retro sort of vibe, right? And so this has got the channel knob, and this is photos go back and forth, and it's got a little sensitivity area up there, and you roll through photos, and it was supposed to be kind of friendly, making technology friendly to some extent. So I had come up with this idea after I'd filmed the video, and after we even had some investment, and it was kind of controversial for people as well. So we eventually, though, did this new Kickstarter, and we didn't use Kickstarter, by the way. We just used our own internal systems. Most people were kind of, I would say most people, but it was half and half, right? Like, I'm going to do the pre-order on my own and control it, versus I'm going to do a pre-order and put it on Kickstarter. We decided to do our own. And we screwed the hell up out of that thing. And it was manual error. Someone in the company, the playbook is you build up a bunch of email lists, you get people stoked about it somehow, some way, and usually have a contest. We'll give away 20 or 30 of these things. Well, somebody in, zero sleep in 3 days, pressed a button, and it said everybody went, congratulations, you're a winner.
Everyone got the device?
Everyone got an email that said you're a winner, but there was really only 50 out of like the 15,000 people that got this thing. Whew, that was rough. And, credit, I think it was Renan called me up immediately after that. I think I had emailed my investors and kind of told them, and I said, hey, look, we've had a bit of a flub here, and I just want you to be aware of this thing, and he called or emailed, he's like, this shit happens all the time. He's just like, don't get too down on yourself. The worst thing you do is get down on yourself. You need to kind of pick yourself up. You need to pick up the team. You need to park this to the side. Reality is that most Kickstarters fail the first time or do some small number, and then they eventually figure out the right answer and they did it correctly. And so I needed to hear that. It was so helpful to get that sort of positive reinforcement and kind of just park it. And we obviously emailed everyone and said, I'm really sorry. This was sent in error. There aren't any, that you are not a winner, unfortunately. The winning list is over here. They're real people. I've covered the names, but these are the people that if your name's on this list, great. If not, I'm sorry, but this was just sent out in error. And for probably the next 2 to 3 years, once every week or 2 weeks, someone say, where's my free fucking loot? Like, liars. And so that was probably mentally the thing that we had to brace for, was just that, we try to communicate, you try to do everything you can, but people don't listen, and they're just like, that was a scam. You just tried to scam me because you wanted me to share this with my network, and it's a very fair thing for someone to assume. And then of course you're late with the hardware, it just makes it worse. And so we eventually did it, right? And we did it right. And we were doing like $100,000 a week in sales, like from a cold start, doing another pre-order, right? This time we're closer to the product being built. And so now we took that, and in between that, it is hard for me to remember exactly the sequence of these things. I think I had already started raising money before this. So I think I had closed before we had that shitty, that shitty Kickstarter. We had raised more money, and I just can't remember exactly how much insider or new stuff. But we had a bit more
okay. We don't have to get, this isn't like a chronology of single.
Yeah, totally. So, but just the life cycle of the company, we eventually did it and cracked it. And now we're doing like 100,000 a week in sales. And it's working. We still had some uncertainty of the cost of our own product. And it was just like I kind of shut it off after $1 million in sales. And it was becoming less productive and less profitable as time went by. So sure, people wonder, why didn't you just keep going and make sales? I go, you're adding liability. Like you're not just adding more is more, you're adding liability to the company. And this, like, if things go wrong, like the problem's just getting worse. So I figured $1 million was a checkbox. And, to say, look, there's demand here. And then we use that to say, hey, everybody, we just hit $1 million in sales, right? And we're going out and raising money to go build this thing now.
That's $1 million in pre-order
revenue. Yeah. And we were probably 6 to 9 months before it was going to ship. So, it was dicey time about, I think it's going to ship in 6 months. It probably took 9 months to get the first unit out and another 6 months to get all of them out, right? It becomes a long time, but eventually we did ship $1 million worth of product of this guy, and people love it. They still use it.
I like retro design.
I swear to God, the people that came out using it is like the Apple, like some of these people are like the top Apple designers and stuff, like use it and love it because it has such it is a work of art from a designer's perspective. And so, and ultimately, and really what we found, this is kind of pivoting just a little bit, but what we found was that it was, the hardware wasn't the thing, right? Mm-hmm. It was the software that was the magic, right? And I thought that was true a little bit, but it turned out to be 10 times more important. Meaning, if you can't get someone to engage and use your app for photo sharing and share it with their family and connect with them, the whole thing is broken. You don't have a product. You don't have a company. And so we really had to shift our mindset to say, okay, and this has been like an evolution too, is hardware, make sure it's really easy to make, it's cheap to make, put your own little special design on it, but lean into that software, level up your team, and make that sensational. And that's something that we really had to shift in our brain. Again, we kind of knew that. I knew user experience and general software was going to be important. I kind of didn't really understand how hard it would be. Like, I guess that's probably the way to look at it. I mean, how many startups that start as, oh, I'll just make a little web page and you upload some stuff and whatever, it'll be easy. It's always hard, right? 90% of companies are software companies. And so we kind of hit that same thing. We're like, whoa, I understand when people say hardware companies, are hard. I've never heard someone say I've been challenged on making plastic, right? Or an electronic piece. The answer is always, just like Ring doorbell, holy shit, the software doesn't work.
Yeah. Yeah.
Right? And yeah, so anyways, that big evolution in the company. But we were able to, go through that. And to be fair, this has come back to fundraising. One of the things I would probably, and I only got better over time, was I probably dripped in the money a little bit more than having like one close, saying, that's it, we're closing. And you're enabled a little bit by this, especially if you have a convertible note, right? It kind of gives you this ability to close, to do a rolling close, which, frankly, might have saved the company in terms of just having enough money to get more milestones and more milestones. But it also sometimes develops bad habits where you're not going all in on fundraising and really focusing and trying to lock it down so then you can go build, right? And I think that's, one of those critical, if I was kind of talking to how I raise this and people fundraising, it doesn't always work this way. And there's a truth to the matter of that you're kind of always fundraising, but as much as you can you find time, realize there's trade-offs on your product building, realize there's trade-offs on, your team and how much momentum you're going to continue with maybe sales. You'll turn away, things will go downhill for 3 months, but the trade-off is probably worth it. Right. The trade-off is probably worth it.
Trade-off of going all in on fundraising.
Going all in on fundraising.
Yeah.
Okay.
Let's talk more about fundraising. So let me focus you in a little bit here. So, some interesting stories of kind of finding your way and finding your footing in those early days, how to raise money. Maybe talk about more things that have been working for you or more recent modern approaches to fundraising.
Yeah. So I used to have this view that, how would I put it? It started out with that view of like, hey, you really just want to bring this to a handful of people, right? A lot of things have changed. And by the way, you want a really good reference. So 7 years ago, I don't know when it started or ended, but like up until maybe 3 or 4 years ago, I would think started to shift, but you needed a warm intro to an investor. And they would be like, hey, look, this is my price to pay for getting in my inbox. You need to show me creativity. There's a logic to that, right? Show me you're creative and you have enough ingenuity that you can meet someone that I know and get a warm intro. It's not crazy. The problem is there's now thousands, it's probably the amount of investors maybe has gone up 10x, right? So even with someone like me with a great network in the middle of Silicon Valley, I would never be able to activate enough meetings to get around close, because the number of meetings required to close a significant round is way more than you think. Let's use some math. I don't know if these are exact numbers, but they, I think Jack Dorsey, after having, helping to create Twitter, I think he had to do 120 meetings for Square. I think the Airbnb guys had to do somewhere around 120 meetings. That's not intros, that's meetings. Right. So it's hard for them and they have to do 120. You need to be thinking about more than that. And to get that, if you were to have your best friends that could make 5 intros, right? Like, what is that? 20 friends to give you 5, all of them to give high quality 5 intros to get 100. It's almost impossible, right? And so what we found was that in order to scale it up, I would need to start to reach out to people directly. And by doing that, now one, there's people's content. You can do this through LinkedIn, and that has a certain yield. It's not terrible. There's companies like Your Product, right, where you can get access to the names of these people and some information on that. So it's kind of readily available for you. Then it comes down to copy, right? And systems, right? And I won't get into systems too much, but you could automate this stuff, or you could just, you could use superhuman and semi-automate stuff. So it's more like cut and paste, put in your own little things. But I have seen it before work where you're just like, this is what I do. This is what we're making. Is this interesting to you? You want to have a phone call? Super concise, couple points. And we kind of talked about this earlier. If you change your mindset that you're not trying to convince people of stuff, you're actually trying to find your true believers, right? The people that you don't even have to tell them too much and they're going to go, oh, I love it. I get it, right? You're trying to find those people rather than convert people that are not interested on your space. My true believers generally have families with kids and they relate to the problem we're solving. And therefore, it doesn't take a heavy lift to go. They're like, oh, yeah, wow, yeah. Oh, I totally have that problem. Yeah, that's exactly what we do as a family. And in fact, one other thing that was a bit of an unlock in my fundraising strategy was, it was kind of hard for me to explain like the problem we solve generically. And so like if I jumped right to, hey, Loop is a photo sharing and digital picture frame, like it's sometimes a bit of a dry story, right? There's just, so where's the drama and what is it? And I was on a flight to New York City to pitch some folks, and we came up with this interesting, someone told me, she's like, God, everyone loves what you're doing and all that, but like the deck doesn't seem like it. The pitch is a little less thing. Can you make it a relatable story? And I decided to, instead of talking generically, I picked one customer I knew and I told the story that he told me, right? And it was like, I got a little son, I'm from Seattle and my son's named Alex. And at first we tried this, Apple system, but my dad had an Android phone. So we all started a group chat message. But after a while, people wondered where'd all those great pictures go, and we still have to email them to grandma, and then mom's posting on Facebook, and we're trying to get off of it. That's his story. And I found out that story is a relatable story. And when I pitched that first time in New York City, the audience erupted laughing because they could all relate to some or all of it. And that set the table then. And the takeaway on that one was, try to tell your authentic story. Like, try not to use gobbledygook, right? In your pitches. And, obviously the easy one to do would be AI, a little bit of Web3. And maybe there's value to dripping that in, but like, if truthful. But I think in a lot of ways, trying to find your authentic truth, I really feel like the more authentic I got with my investor stuff, the more success I had. The more authentic I got with my marketing stuff, the better success we had. It was just trying to like kind of get out of your own way and to be like, how do I very simply explain what's going on here?
Yeah, that's good. What we in our pre-call we talked about a few different things. Finding true believers, I like that a lot, versus convincing people. I think that's great. A little more on the numbers game and maybe creating FOMO. So you're talking to a lot of people. You said something that I thought was interesting. I think you referenced someone else that said it takes 100 intros to get 100K. So you can kind of do the math. If you're trying to raise $1 million, you need 1,000 intros, right? But maybe talk more about your process and kind of your networking strategies to both build those numbers of intros and meetings, and also creating that FOMO so people actually take some action. And
number one is having a fundraising deadline is one way of doing it. And basically you're saying, hey, look, it's January. We're going to close this fundraising in end of March or something like that. And creating an artificial deadline for yourself and for them to get on board. And if you've ever bought in a home, you'll find that they use that all the time in terms of like, okay, and we're going to do first signatures and inspections, and then June 2nd, and an invented date, March 31st, we're going to have a closing signatures. Okay, everyone, let's get on board. And by doing that, you create this artificial end deadline. By the way, it shouldn't be artificial, because you're like, I got to get back to work. It's like, I can't do this any longer. So I need to go do this. And I'm pencils down. You got to be prepared that it may not work, right? It just might not work because your timing is just not matching someone else, or Silicon Valley Bank decides to do something, or the stock market crashes, right? This has happened or COVID hits, right? So you've got to be careful. You got to be adaptable and all that, and just change your plan. That's number one. The other FOMO that is really interesting is and I think this is probably what we did the most, is it was like, I'm only raising this much money, right? It's only going to be this much money, right? So maybe it's $250,000. Let's just say it, right? And somebody from like Y Combinator has explained this one time on their own. I just heard them talking about it, and it really was interesting. But basically saying, look, I'm not doing. I'll give you one example. This is not exactly what I did, but I thought it was just well spoken. They said, I'd like to meet you. We're not raising money, but I'm trying to build some relationships. We're going to go out next year. Okay, great. There's a YC company. There's a little credibility built in. They do 10 to 20 meetings, right? And, look, this is a good strategy because you're going to get questions you don't know answers for. You're going to clean up the whole story. They came at the end of this and they said, what they expected was one or two people said, hey, look, I'm interested actually now if you are, right? And you go, oh, that's great. Okay, well, let me think about it. Then you go back to every other investor and you said, so turns out, surprise, surprise, I was shocked, but people actually want to invest now. So I'm going to do $250,000, right? Okay, great. Oh boy, you're not going to believe this. Our $250,000 is oversubscribed. I think I'm going to turn this into a $750K pre-seed angel round or something like that. Let me know if you're interested. And what the investors are hearing is momentum.
Sure.
I first was 0, then I'm 250, now I'm 550, now I'm 750. So that is in itself a pressure cooker of emotion and FOMO of like, damn, this thing might run away from me. And they use that as the way. Now, obviously with, you got to price your round appropriately so the dilution's not cuckoo. If you were only planning on doing 250 and then you end up stacking 3 times that. But at the same time, I don't even think dilution matters as much as people give it to, credit. And so I've seen that as another maneuver, but I think those are the 2 best levers that you can play with.
Yeah, no, I like it. It's I'll tack on a little note on that. One thing I've seen people do, and now I kind of tell people to do this a lot, partly because we released a data room product, but I like using the data room as a catalyst to really go have lots of meetings, talk to lots and lots of people with your great pitch, your authentic story, all that stuff. And then you can use the data room as a catalyst too. There's a deadline for that. You could say, we're opening up our data room.
Oh, wow.
September 4th through September 30th is we're going to give access to our data room, which is fully stocked with all our IP, our financials, everything, right? If you're serious about coming in on this round, you are considering putting down a term sheet, we'll give you access. Let me know. Do you want access to our data room? In other words, kind of make it like, you've got to be serious to get into our data room. Let me know if you want into our data room. But
I think you're hitting on
yeah.
I think you're hitting on a super, super important point, which is investors actually want that, right? Like they want you to be in command. And this is a caveat to that too, as well. This is actually a good, nice little point. One of my investors told me this. Imagine you go to somebody to have something in your back pocket for good news, right? Generally speaking, you have a meeting. What's in your toolkit to reignite the conversation? Hey, you've had a week to think about this. Would you like to have a follow-up? That's kind of lame.
Yeah.
When you think about it, right? There's no substance, right? How are things going on your end, right? These are really lame and unhelpful. You're probably not going to get a response, even if they might have liked you. But hey, I just want to let you know that we actually just hit 200,000 in ARR and we're growing by 10%. So week to week or something like that. And so the idea is that you don't give everything all at once. You hold back a handful of details that may not even be like then, or they could even happen earlier, or you knew they were going to happen, you just didn't tell them. Have something to follow up on so that you get this momentum, kind of like I talked about earlier, where it's like, hey, we weren't going to raise any money, then it's 250, then it's thriving, now it's 600. They're seeing this pattern of growth and going, there's and it's substantive, right? So I think having I think it's a corollary to what you're talking about. Like, I'm in command of this. If you want access, that's a piece of that FOMO or in command or just body language. And I think I've done the best when I have had that sort of personal conviction that I'm closing this round, right? Now, the only thing is you've got to be prepared. You've got to give enough room for these people to have meetings and all that. And by the way, the other story that an investor told me one time that is kind of similar in some ways was, he said, number one is every investor that you meet that you want, make them think they're coming in at the exact correct time.
Hmm.
Right. So one way would be to say, hey, look, it's getting really late. I'm sorry. This is when FOMO goes too long. Right.
Uh-huh.
You take FOMO too far. Now you've got a busy investor. And if they're really good, they have probably a lot of options. And if you're, oh, man, I'm sorry. Have fun with this round. I'm sorry. We're just a little too late. I don't really have time to go catching up with all the other people and then miss out on this deal. I'm going to put in all the effort. I'm too late. And then I'm going to miss it anyways. So why would I waste my time here? So the idea would be that maybe you're meeting the first investors aren't your like the final ones you want, but you wouldn't mind getting a term sheet or getting a commitment or whatever. And then as you go into the next ones, just making sure that the language is, this is great. Like we already started having some meetings. We're right at the beginning of this stuff. And we're going to end these meetings in like 2 weeks. So you're right in the middle of the first set of meetings, even though you might be on your second set.
Yeah.
You know, again, you got to be careful with this idea of like being truthful and, you know, you want to be truthful, you want to be honest. People will pick up if you're not telling the truth, but you can couch it in just like, again, maybe not being that detailed. You're like, this is great. Like you're the perfect timing for us. We're having our first meetings now. Sure. And that's true because some of the people you're meeting are brand new, but you might be on second meetings with somebody else. But I think just kind of making sure that they're comfortable there in a perfect spot and not too early either. Oh, we're raising money. You're going to be done in November. They're like, okay, I can put you to the side.
Yeah. Right.
Don't have to think about this for 5 months. Great. Thank you.
That's interesting. All right. I won't keep you too long. You've got a hardware and software business to run, but one of my favorite questions, any other tips for raising capital that you haven't covered? Or if you were talking to your younger self, rewinding the clock, what advice would you give him on raising capital? Anything we haven't covered?
One, don't be late for your next fundraising meeting. I actually have a call here I got to jump right over to. But
that's a good point. Okay.
Well, I didn't realize I had back to back, but no, I think what the last thing I just give is, you know, it's probably going to take way more meetings for you to be successful, and just focus on, you know, don't be too cute on who you think is the right person for you. It's their job to decide and self-select if they're interested. So you're trying to tell your story to a lot of people. You don't know what their life situation is, their investing situation is, and don't pretend that. Like, so, you know, you doing your own, cycling, that's it. You got to be careful. You don't be too cute and too narrow with your focus.
I like it. Cool. People want to learn more. It's joinloop.com.
Yeah, Brian at joinloop.com.
Excellent. Well, thank you, sir. Appreciate it. Thank you for both coming on the show and being a Founder Suite customer. And good luck with your next round.
Thanks. Appreciate it.
Okay. Bye.